Okay, good morning, everybody. Welcome to this, which is the final lecture in the group and which will be an assignment run through. So what the purpose of this is mainly just to help you guys with a few snags. There's one or two lines that I've read through that might be interpreted on 2 or 3 ways, and there is merit to all of them. So hopefully this read through will give you an indication of what needs to be done and hopefully sort out any questions that you have. Okay, I'm going to share the assignment with you guys. And then let's get right into it. I actually want to start on the first page. It might seem silly, but there's some info there that I think a lot of guys might actually miss. So this assignment consists of 4 questions. Every year we actually have quite a few students that miss questions. So please make sure that you do attempt all 4. I've read through the assignment. I don't think it's the most difficult one. I think there's a very good chance of passing this if you just keep clear head on you. Okay, so make sure you do all 4 questions. All are compulsory, so you can't pick which ones you want to do. You've got to do all 4 to be able to pass this. Okay, compile your answers neatly, preferably making use of spreadsheet software such as Excel or to set up count columns in which you type your answers. Okay, so if you do use Excel, I know a lot of you guys are good with Word. If you want to use Word, remember to PDF the document and to upload it into PDF, because our marking software can't mark Excel sheets. So you have to convert it to PDF before you upload. Okay, assignment counts out of 100 marks. Okay, then this next paragraph is also very key. The bulk of this assignment is T accounts, which we've now at this stage done extensively. So in order to obtain a mark for a transaction leg, debit and credit entry, all of this following should be in place. So normally in the marking plan, there's a mark for the debit leg and there's a mark for the credit leg. But you get that one leg, or either your debit or your credit leg, the accounting entry has to appear under the correct name. So your T account has to be the correct name. You can't put it under the wrong T account. Your accounting entry has to be correctly allocated on the debit or the credit side. So if you mix your debits and credits around, also no marks for that. Then the contra account indicated has to be correct. So remember when we did the ledgers, so let's say you're posting from a fee, then you're going to debit your client, but your description in the client's T account will be fee income. And in the fee income T account, your description will be the client's ledger. So you've got a reference between the 2 T accounts by the name. So you put the description of the one T account in the name, and likewise on the other one. Okay, and then obviously the rand amount must be correct. So if you calculated the wrong amount, no marks for that. Okay, if any of these aspects are incorrect, no mark will be awarded. So if you get all of it right, but you put the wrong T account, no marks. If you put all the correct name, you're on the right side and the correct account, but you made a calculation error, no mark. So all 4 of those things have to be in place to get your mark. Okay. And then lastly, where specifically indicated that value added tax is applicable, a VAT rate of 15% should be used for calculations. Now let me spell this out. Question 1, VAT is applicable. Question 2, VAT is not applicable. Question 3, VAT is not applicable. Question 4, VAT is not applicable. So VAT is only applicable to question 1. Okay, let's move on to the first question. Okay, so what I want to do is I'm first going to scan through to the required part. And let's first see what's required. So they say prepare all the relevant accounting entries related to the statement above in the following records of Smith Attorneys for November 2021. And then it says what accounting records they need. So basically, to make this easy, all that they are asking is that you must do T accounts for all the relevant accounts. Now I'm going to make it even more easy, and I'm going to give you all the relevant T accounts so that you guys open up at least the correct accounts under the correct names, but it will then be up to you to analyze and put the transactions in the correct one. So you are going to have 6 T accounts for this question. First being your trust cash book, second the business cash book. Then you're going to need a VAT control. You're going to have Gray Attorney's trust ledger, and you're going to have Gray Attorney's business data, and you are going to have a fees account. So those 60 accounts are basically what they want. No more, no less. Okay, now we can go back. Now that we know what we need, we can go back and read the question. So question 1 says, you own the firm Smith Attorneys operating from Durban and receive instruction from your correspondent Gray Attorneys. So remember, Gray Attorneys is actually your client. There's no matter what they instruct you to do, you don't open those guys. Gray Attorneys is your client. Operating from Cape Town to see to a collection matter. You are instructed to recover debt of 900,000. Okay, so remember, that doesn't mean you have recovered debt of 900,000. It just says that's the amount that you are recovering. So there's no transaction there at this point. From Mr. Naidu on behalf of your correspondence client, Ms. Dahlia. Okay, so nothing there. Remember, Mr. Naidu, he's not your client. Ms. Dahlia is not your client. Gray Attorneys are your client. That's why we open a trust ledger for Gray Attorneys. Okay, so then basically, Gray Attorneys, we are sending them our statement of what has happened. So let's just have a read through this. So cash collected from Mr. Naidu, 600,000 Rand. Okay, now you'll see the date on this statement is the 20th of November. So let's assume that all of these transactions from a date perspective happened on the 20th of November, because you will see there's no dates in the question itself. So cash collected from Mr. Naidu. So what are you going to do there? That's simply going to be a trust receipt. Okay? And towards the trust creditor. Then next, we've got fee for issuing summons. So that's now your fee. So that will be a normal fee entry towards the debtor. And the other leg, I'm not going to give. So with this read through, I'm not going to give you guys the which account to debit and which account to credit. There's at least some part that you've got to figure out for yourselves. Okay, so that's a normal fee entry. Then the sheriff cost, the 7,200. Assume that was paid through the business account on the 20th of November. So the money is going to go out of the business account, and you've got to debit your Gray Attorneys to show that they now owe you that money. Then collection commission will be a normal fee journal. So that one you can figure out on yourself. Okay, now the next one says 30% correspondence allowance with a question mark. So you've got to work out how much is the correspondence allowance that you're going to give to Gray Attorneys. So now we've got to look at the debit entries above. Fee for issuing summons. Are they allowed to get their 30% on that? Yes, they are. On sheriff costs, are they allowed a collection or correspondence allowance on sheriff costs? No. You invoice them 100%, they've got to pay you everything, otherwise you're going to lose. And then collection commission, are they allowed of 30% on the collection commission? And the answer is yes. So your 30% correspondence allowance that you've got to enter on the question mark will basically be 30% of the fee and the collection commission. Okay? And then the line item below that, you will need to have proof of electronic funds transfer herewith. So basically then you pay the balance which is left over to your client to Gray Attorneys from your trust account. So you're going to take the 600, deduct the 37 to 34. You're going to add back the 30% allowance, and whatever is left then is what you've got in trust, and you will then do a payment to Grey Attorneys for that amount. Okay, so let's read on. According to your agreement with Grey Attorneys, they are granted a 30% correspondence allowance on all income earned by Smith Attorneys as a direct result of service performed with regards to the above matters. So remember, for the services that you render, for your fee and for the collection commission, it's a normal fee journal. So debit the client, credit fee income, credit VAT. For this 30% allowance, you've basically got to take that entire journal and throw it into reverse. So you're going to credit the business data, debit fees, debit VAT input with that 30%. Okay. Now, you guys will probably think, but do I need to post 2 entries for each one? Or in other words, do I have to reverse each one individually? It doesn't matter as long as you get to the correct answer. But on the mark plan, they put the 30% correspondence allowance in as a single entry. So you don't have to split between fees and collection commission. You can simply enter your 30% correspondence allowance as a single entry. Okay, Smith and Grey Attorneys are both registered VAT vendors. On the 30th of November, you pay the VAT liability for November 21 over to SARS. Okay, that's very important because a lot of guys forget that. It's the easiest entry. You simply take whatever the balance is on your VAT control due to SARS and you pay it from your business cash book. Okay, that's the only comments I have on question 1. This, I think, is the most tricky of all of them. I think the rest of the questions are actually easier than this one. Okay, so question 2, let's go down to the required and see what they are asking of us. Okay, you are required to prepare all the relevant accounting entries related to the statement above in the following records of Cha-Cha Attorneys. Okay, and then we have more or less the same description as what we had in question 1. So again, they are asking us to do T accounts. Now, again, I will help you and tell you what T accounts you need to open to successfully pass this question. So the first one is, again, a trust cash book and a business cash book. So 2 accounts there. Then we have Mr. Trevor, business debtor. We have an income and a fee account. We're going to have our section 86.4 investment. We're going to open an account for the LBF for their 5% they earn on the investment. We're going to have Trevor Trust Ledger, and we're going to have Benedicta Trust Ledger. So we're going to split between the buyer and the seller. Okay. So let's have a read through the question. Okay. Your firm, Cha-Cha Attorneys, is appointed in the as the conveyancer in agreement of sale of immovable property sold to you by your client, Mr. Trevor. So when you open up Mr. Trevor's account, I will immediately put next to it seller. So that's just for yourself. There's no mark in it, but so that you don't get confused between buyer and seller and the names. And we're transferring to the purchaser, Mr. Benedicta. So for him, we will write next to it, purchaser. You drafted the sales agreement on instruction of your client, Mr. Trevor. The agreement makes provision for the purchase price of 2.1 million. So that's just information, nothing that we have to do there. Paid by the purchaser by way of a deposit of 210,000 and the balance to be paid on registration of transfer. Okay, so there's no entry where they say you received the 210. So that's just all information, nothing that we can process yet there. Okay, the agreement provides for the costs related to the transfer to be paid as follows. So basically, they're giving you answers here. They're saying the purchaser is responsible to pay the transfer duty, estate agent com, occupational rent, and your fees. So obviously, any other expenses mentioned below, or any other payments that you have to make below, will then be for the account of the seller. The seller is responsible to pay all remaining costs related to the finalization of the transfer. Okay, now we've got a date. So now the first transaction actually starts. So on the 2nd of January 2022, Mr. Benedicta pays the deposit of 210,000. So let's just stop there. That is a normal trust cash book transaction. And you are requested to invest it on her behalf. Okay, so then there's a second trust cash book entry there where you're going to move the money from your trust account into section 86 investment account. You execute this instruction and invest the money at Jazz Bank. On the same date, Mrs. Benedicta also pays you an additional 96,500 to cover costs related to the transfer. So the 96,500, simple trust cash book receipt. Okay, then on the 3rd of January, the estate agent submits a pro forma invoice of 73,500 to you. Okay, so they submit the pro forma. It doesn't say that you pay that because we can't pay it at that date. We can only pay it once registration has taken place. So that's information that we'll use at a later stage. Then on the 4th of January, Mr. Trevor transfers 18,000 to cover costs related to the transfer by means of EFT. So simple trust cash book receipt on the 18,000. On the 7th of January, you pay Ballard Electricians 3,000 Rand out of the trust bank account for the issuance of the electrical compliance certificate required for the transfer. Okay, so now what you guys have to figure out, so it's obviously a trust cash book payment, but you've got to figure out, do you allocate this to the seller's account or to the buyer's account? On the 25th of January, you receive a guarantee from Two Step Bank for 767,500. So this just basically means that once registration takes place, then, let me just move this thing down. Once registration takes place, you will get that money from Two Step Bank. So we only receive it guaranteed. It doesn't get receipted into the trust. But we know on registration date, there's going to be a receipt to that value. A copy of a guarantee for 1.122500 payable to Mr. Trevor's existing bondholders, Hip Hop Bank, is also sent to you by Two Step Bank. Now, will that money touch your trust bank account? The answer is no. Hip Hop Bank or Two Step Bank will pay the money directly to Hip Hop Bank. So that transaction is not applicable to our ledgers. Only the guarantee that we receive in the business, in the trust account. Okay, then on the 28th of January, you pay Ekurhuleni Metropolitan Municipality 14,000 Rand for outstanding rates. So again, it's a trust cash book payment, but you've got to figure out who pays that, seller or buyer, on the property, and the South African Revenue Service relevant transfer duty based on current transfer duty rates table. Okay, so you also make the transfer duty payment, so you're going to have to Google whatever the latest rates table is, and then work out the transfer duty based on that. Okay, and again, it's a trust cash book payment for transfer duty, but you've got to figure out who pays it, Mr. Buyer or Mr. Seller. The transfer is registered on the 30th of January 2022. Okay, so now everything's going to happen. Jazz Bank pays a total of 2,755 interest on the investment of the deposit after transferring 145 Rand to the LBF. Okay, so the interest transaction you're going to first show as a receipt in the investment, and the credit goes to the client that you invested the money on behalf of. Then the 145 to the LPFF. I also want you to first show it as a receipt in the investment and then credit the LPFF account. So you don't pay it out to the LPFF directly. So after you've credited the LPFF ledger, then you must have a second entry from the investment bank where you then pay the LPFF, where the 145 goes out of the investment bank and your LPFF account goes home to 0. And then you receive 767,500 Rand from two-step, which is that guarantee that was mentioned above. And they also pay Hip Hop Bank. Okay, that's great, but it's got nothing to do with me. Money doesn't touch my trust account. Mr. Trevor should receive 8,400 Rand for occupational rent. Okay, so what you've got to do is you've got to do a journal where you take the money out of Miss Benedicta's account and you credit Mr. Trevor's account first to show that the rent is due from him. So we move it out of her account into his account, and then also you must physically pay it to him. So there's a second transaction there where you pay out the occupational rent after you've done the journal to take it from Miss Benedicta to Mr. Trevor. Okay, and then it says your fees amount to 21,850. So that's a normal fee journal. You're going to debit the business account of whoever is liable for your fees, and you're going to credit fee income. VAT is not applicable, so don't worry about VAT. Okay, then after performing the necessary transfers and making the required accounting entries, you close off all the relevant accounts. So at this point, you are going to do a journal from Mr. Buyer to Mr. Seller, which you guys will have to calculate. I'm just telling you, you're going to move the funds from Mr. Buyer to Mr. Seller to show that it's due to him, and you then pay out anything to Mr. Buyer that he must get. You pay out Mr. Seller, and you've got to do a trust to business transfer for your fees. So there's basically 4 transactions in that line that says after performing the necessary transfers and making the required accounting entries, you close off all the relevant accounts. So it's basically a journal from buyer to seller, a payment to seller, payment to buyer, and a trust to business transfer for your fees. And then we can ignore VAT, which is a bit of a blessing. Okay, so there's a few entries in this that is very difficult and that I think 90% of you will probably not get. But if you only do the basic trust receipts, trust payments, and you allocate it to the direct trust creditors account to Mrs. Benedicta and Mr. Trevor, you will pass this question with flying colors. Even if you forget all the fancy stuff and journals and that, if you just do the cash book entries correct, you will pass this question. Okay, let's move on to question number 3. Your trust cash book. Okay, let's first go see what do they want here. So prepare a supplementary cash book for December and prepare a trust bank reconciliation for December. So they're asking us to do a supplementary cash book and a bank recon on the trust account. Right, so let's have a read through. Your trust cash book balance at 31 December 2021 reflected a balance of 4929894. So immediately you can put that as a debit entry in your supplementary cash book as the balance brought forward. And then it says bank statement balance on the same day was 5,127,798. In other words, you can enter that onto your bank recon because we know that's ultimately what we've got to reconcile. So that's going to be the answer. We've got to fill in the body to get to that answer. Okay. A comparison of the trust cash book and trust bank statement for December 21 reveals the following. So now we're going to find all the entries that we need. So interest of 20,643 on the favorable trust account balance has not been entered in the trust cash book. So let's ask ourselves, is it a transaction that will happen in future? Answer is no, it has already happened. It is there on the bank statement. So I have no option then to go and add that entry into my supplementary cash book. Number 2, a check of 7,464 Rand, which was issued on 18 July 2019, this is 2 years ago, to Peter Piper, a client of yours, as a reimbursement of funds held in trust, has still not been presented to payment to the bank. Okay. the check was reversed from the cash book. So in other words, they have, when the check went stale, reversed it from the cash book. But a transfer has not yet been done as the firm awaits banking details from Peter Piper. Okay, so this one's a bit tricky. So let's think about it. There was a cash book entry of a payment out. When the check went stale, or we realized that he's not going to cash the check, we reversed it. So currently that entry is lying as a 0 in our books, presumably prior to the date that we are doing the accounts here. And then it says we have not yet issued a new check or a payment because we don't know what it is. So in essence, there's no entry here. Had they not put the line in to say that the check was reversed, then we would have now had to reverse it to indicate that it's a stale check and it would not in future go through the bank. But they've already done it, so there's nothing here to do. Okay, moving on to 3. A transfer of 147,681 to your client, a bit of a grammar error there, to the client Dora Dean as part of a conveyancing transaction in which she showed a property does not reflect at the bank. Okay, so they don't put dates here. So it's difficult to say that, is this a fake transaction? Is it not? So for purpose of the assignment, I'm going to say assume that this transaction will still pass through the bank. So in that case, it will be a bank reconciliation entry. So assume that will still happen. Moving on to 4, a deposit of 102,000 and some cents, for which proof of payment was received on the 28th of December from the Road Accident Fund, does not appear on the bank statement. The deposit relates to a claim that you submitted on behalf of your client, Sam Sloan. So, again, it's a bit of a doubt. What can we do? Is it legit? Is it not? So let's say once we receive proof of payment from the Road Accident Fund, I think it's reasonable for 2 or 3 days to go by before the funds actually clear and show in your bank. So for purposes of number 4, I'm going to say assume that it will pass. So thus enter it onto the bank reconciliation. Number 5, a transfer for 48,333 drawn from the business bank account during December for office computers purchased has erroneously been paid by the bank from the trust account. So now you've got to ask yourself, who made the mistake? And the answer is the bank made the mistake. So what do we know? If the bank makes the mistake, then it's a bank reconciliation entry. Okay, number 7, a EFT transfer of 375,000 received from a client, Barney Brent, has not been entered in the cash book. So we've got a client there, we've received an EFT, it's not showing in our cash book. So all that we've got to do is go and enter it into our cash book. Number 8, a transfer for 217,000 some rands that you issued to a client, Cliff, was incorrectly indicated on the bank statement as 271,455. So, who was incorrect? You or the bank? And the answer is the bank. So, if it's a bank error, we know it's a bank recon entry. So, in this case, I would use that little 100 Rand method that I taught you guys in the bank recon lecture, and you can figure out whether it's a plus or a minus on the bank reconciliation. Then the last one, a deposit of 155,000 received from your client, Evelyn Eel, was incorrectly entered into your trust cash book as 137,550. Okay, so what does that mean? Who made the error there, us or the bank? And the answer is we did. It was incorrectly entered into our trust cash book. So we have to enter a trust cash book transaction to correct that entry. So whether you pass one entry for the difference, or whether you reverse the wrong one and repeat the correct one, or then post the correct one, both ways you'll get your marks. Okay, so this one also, some difficult stuff in there, but if you stick to all the basic stuff and basically just pass all the cash book transactions even, you're going to get very close to a pass on this. Okay, then we get to question number 4. Now, question number 4, in my opinion, is an absolute bonus question where you can make up a lot of very easy marks. Okay, so what do they want us to do? They want us to do an income statement, budget, and a cash flow forecast. So this would look exactly the same as the one that we did in the assignment for the December 2022 in column format. So here they put January, February. So there's going to be 12 columns. You need to have columns from January, February, March, April, May, June, all the way up to December. So you've got 12 columns that you've got to enter stuff into. So in preparing our budget and cash flow for the year ended 31 December 2022, the following information was received from your accountant. Monthly expenses. So this is very simple. Salaries, is it income statement, cash flow, or is it budget, cash flow, none or both? So basically for all the entries under monthly expenses, they will be budget and cash flow every month. This will look exactly the same. So salary 78 grand every month, rent 32, telephone, internet, monthly rental, office expenses, marketing cost. Okay. Then depreciation. What do we say about depreciation? Is that budget, cash flow, none or both? Can't be both because you don't go and pay your depreciation every month. So that will then only go into the budget. Just be aware before you just go and scratch all of these items all the way through from Jan to December. There might be some notes at the bottom here, specifically relating to rent, if I remember correctly. So you can, all the other monthly expenses, you guys can populate all the way through. Just leave the rent one out at this stage. Let's just read what happens to the rent. Okay. Due to the effects of COVID-19, the entity chose to move to a smaller premises. A contract was signed for new office premises from 1 August 2022. Then the deposit payable. Now, are we going to get, is the deposit an expense? No, it's not an expense because in future I will get my deposit back. So the deposit payable is only a cash flow item. And the monthly rental is 25. So up to July, you're going to have the monthly rent of 32. And then it's going to decrease from August onwards to 25. And then it also says you are expected to receive a 15,000 deposit refund. So again, that doesn't go into the budget because it's not income. It's merely a refund of my previous deposit. So that's only a cash book entry. Okay, and then it says you invoiced 100,000 Rand on a monthly basis in 2020. I presume that's a typing error. That must be 2021 because we're now doing 2022. So you are planning on increasing the monthly invoicing with 5% from March on 2022 and then 5% in August. So I just want to make sure there. So the 5% in August is based on the March number. So it's not 100,000 plus 5%, which makes it 105, and another 5%, which makes it 110. It's 5% on the 105. So you guys have got to work that out from August onwards. Then debtors pay an average of 75% of the invoices during the month. So that part we did. So in your month where you show the fee, you show 75% as a receipt, and in the month after 25%. I just want to make a note on this. Remember, this is an existing firm. It's not a new firm. So you guys must assume that in December 2021, you wrote fees of 100,000 Rand. So that December fees, 25% will be received in January 2022. So it's a bit of a tricky one. Just remember that. Okay, then it says your bank balance on 31 December 2021 is 50,000 Rand. So that's the opening balance of your cash flow forecast. Yeah, and that's it. So this, like I said, if you can just literally take your monthly expenses, your depreciation, and go and write that in, that's already almost a pass just on that. Never mind all the deposits and changes in rent and fees and that. So this is a very, very easy question where you guys can make up a lot of points. It doesn't count a lot, but 20, hey, that's almost halfway to a pass if you only get this one right. And then you've just basically got to get all of your cash book transactions right on the other items on the other questions 1 to 3. Okay, so that basically concludes everything that I wanted to show you guys, teach you guys. If you have any questions, you're welcome to post it on the forum. I normally keep a Thursday aside to answer questions on the forum, so if I don't reply immediately, please excuse, but we do need to schedule actual time for that. And yeah, like I said, I think this assignment is definitely one of the easier guys. So for class of 2022, you're very lucky. I'm sure that there will be a very good pass rate for this. Okay, all of the best. I normally tell the people at this point, I hope that I do not see you again, because then it means that you have passed and you are moving on to your own practice. So all of the best. Enjoy.